Ring the alarm, the caterpillar keeps firing. Oh, we in the war, where butterflies keep dying. I'm a product of Parker Lewis and
Hey, it's Soleil, and this is episode 505 of the Orange Pill Investor. And today I want to talk about innovation. I mentioned it a little bit on True North, I think it was last week. And I pretty much just copied off of Tony Seba's paper on this one. And you know how when you were doing a project, you would just basically copy right out of the encyclopedia and just rearrange the words. So he's got a really good playlist called The Great Transformation from a couple of years ago. And in it, he's predicting some transformations that are going to occur in energy, food, agriculture, transportation, stuff like that. And I thought it would be good to try to see if any of those applications apply to strategy. They certainly apply to Bitcoin. And the basic premise is that disruptions show themselves and demonstrate as S-curves. So they're S-curve type adoptions. And if Stretch really is strategy's iPhone moment, then, you know, this kind of choppy, trending sideways and actually down, it's going to be kind of funny on November 11th when the 1 year chart just starts to get more and more negative. And then November 20th, the 1 year chart, you know, if strategy doesn't go anywhere, the fucking sentiment is going to be absolutely disgusting on X. But if it's reasonable to assume that the preferreds are going to continue, the ATM is going to continue and it's going to develop and get more mature, and the volume and liquidity is going to get greater and greater, then it's reasonable to assume that the disruption to the fixed income market and bond market will be in an S-curve. And, you know, some people are saying, oh, you know, strategy's already been front run and anybody still left in this trade is, I don't know, providing exit liquidity for the smart money who's already exited the trade. And I did see another post where someone was asking, like seriously, what product or service can strategy offer that's truly innovative or, you know, whatever. And I guess the assumption is that the preferreds are not already innovative enough. But I think to be bearish on the preferreds would mean that you just don't think that they're a better product than what exists, which I think would be a pretty ridiculous statement, right? The interest rates that you can get paid are insanely more valuable than anything that's being offered. And that's exactly what entrepreneurs do. They see large profit margins and then they collapse those margins and attack it and provide better service or better products to the consumer. So I think the number one assumption that I'm making is that the preferreds are a better product than anything that's being offered. And right now, the barriers to adoption are probably like trust, right? It's a new product. And so my assumption is that they will attack the current inferior products, disrupt the trillions of dollars in the bond market, and it'll be a winner-take-most scenario. Bitcoin is a winner-take-all scenario. It's a protocol, and all of the stocks, the publicly traded companies built on top of Bitcoin, they're not protocols, so they're not going to be a winner-take-all scenario like the internet. They'll end up being a winner-take-most. So things like a Tesla is going to disrupt electronic vehicles. They're going to disrupt transportation as a service. They're going to disrupt the labor market with Optimus. But there will be other people selling electric vehicles. They'll all be Chinese car manufacturers, but, I don't know. Maybe Ford goes bankrupt last because they seem to be the most well-run. But everyone else is fucked. Volkswagen is fucked. They'll be propped up by the German government for a while. Toyota will be propped up by the Japanese government for a while, but they're all fucked. And the incumbents don't know it. They don't need to know it. They don't think that they need to know it until it's too late. And they will go the way of BlackBerry, Nokia, Blockbuster, MySpace, all that good shit. So if I'm wrong about that, then, then strategy is, not going anywhere. And a bunch of people will exit their strategy positions and outperform me if that's the case. But I don't think so. I think that strategy continues to eat the bond market, which at this point is like an endless source of food to nature. It'd be like the buffaloes before they started getting hunted, and there's just nothing but open plains in North America for them to graze upon, and your herd just grows and grows. That's what the bond market is to strategy right now. It's just this endless source of food for them to dine on. And once they've once Bitcoin eclipses the bond market, maybe they have to figure something else out. But that's probably going to take a couple of decades. And at that point, what will they pivot to? I don't know. Strategy is always pivoted. In 20 years, maybe Saylor doesn't even work there anymore. If they don't have a good transition team, maybe I do exit the trade. But I don't see it really being at risk anytime soon. And I did post on Ben Workman's post where he was asking for tough questions. I guess strategy is asking for tough questions. And mine was about open-mindedness and falsification criteria. And so if I'm going to be an open-minded trader, I do see tons of negative comments on the True North posts, on strategies posts, and to Hurdle Rate podcast posts, and some of them are fair criticisms. They're not always delivered kindly, but I would be remiss if I didn't have my own falsification criteria. So I think there's a saying that goes, anyone who's been in Bitcoin for more than 5 years has never lost money. So that would be my window, right? If this 5-year chart doesn't look like this in 5 years, right? So if October 29th, 2030, if it doesn't show up 1,500% or 2,000% or whatever, they're trying to at least approximate some kind of 2x return, which the 1-year chart folks are happy to point out is they're missing sorely. But my falsification criteria does not lie within a 1-year chart, especially not a 1-year chart after a blow off top. I don't think that's really a fair measuring stick. But boy, are the bears going to be happy on the 20th when they can just pull up the 1 year chart and it not look like they're cherry picking and see it down 20%, 30%, whatever. They're gonna love that. But at any point, if I can zoom out to the 5 year chart and it's underperforming Bitcoin, that would probably be a red flag. That would invalidate my investment thesis, and that their Bitcoin accumulation was not accretive enough to satisfy the market. Or if in 5 years, if the ATMs on the preferreds are not mature enough to just churn out, billions of dollars of Bitcoin whenever they feel like it, that would be one. Another one would be if Strategy ever shows themselves not to be real Bitcoiners. So whenever you hear Saylor talk, it's, never sell your Bitcoin, which I technically don't even really agree with, but I guess it's kind of positive to hear him saying it. If they were to get behind shitcoins or shitcoin companies like Mara, that would be regrettable. What else? Yeah, I'm sure I could be convinced of some other things, but it's generally not what most of the bearish accusations like to talk about. They like to talk about what's happening the last 3, 6, 9, 12 months. And that's a little bit too high time preference for me, which I kind of find surprising. I guess I expect that from TradFi folks, but not Bitcoiners who are supposed to be living in the low time preference kind of new paradigm thing. And I'm reminded of one of my favorite quotes from the Great Transformation series that Tony Seba did. And he may have been quoting someone else, but what I remember is he said that a butterfly is not a caterpillar with wings. And the point is that there are certain transformations that are phase changes. It's not just like, hey, I'm a caterpillar and then I grew wings and now I can fly away. Like, you go into a cocoon, you go through a metamorphosis, and then you come out something completely different. And so right now, Strategy has gone through maybe multiple phase changes, right? They were stacking Bitcoin with their cash. Then they started borrowing money at what seemed like really good rates because it was like 0%, but that was kind of like a Fugazi, right? Because they have to dilute whenever the shares go above their conversion price or whatever the hell it is. Then they end up having to hand over the shares to the bond, and that's their profit. And there's a whole lot of shenanigans that goes along with that. All their hedging, their delta hedging, and playing the gamma game. And so now they've transitioned from that to the preferreds, and it's going to be interesting to see what kind of butterfly hatches from that cocoon, I suppose. And I think that the bears are just looking at this chart and are not patient enough to wait for, they're staring at a chrysalis and can't really imagine what's going to hatch or emerge from that. But, you should form your falsification criteria and figure out what your investment horizon is, and, maybe not take positions in companies that have, low time preference, Bitcoin ideologies, and are happy to play the long game. I think there was a lot of hype, even in the True North community on X and on our show, where we would highlight the catalyst. It's like, oh, maybe we'll get a God candles on this catalyst, and maybe this catalyst, maybe that catalyst. Well, almost all the catalysts are gone. except for lower interest rates and S&P 500 inclusion. Preferred ATM liquidity and maturation. I think those are mostly the only catalysts we have left. So there are a lot less bullish kind of euphoria, fingers crossed, hopium events left. And I think mostly what's left is really just kind of, okay, short-term trading aside, do you have a long-term belief in the company? The other quote that I heard recently that I liked, and I can't remember where I heard it, and Grok couldn't figure it out for me, but it was something like, if you wouldn't own the whole company, then you shouldn't own a single share. And I thought that was pretty good advice. So I can't imagine that anyone wouldn't, if they trusted themselves even in the slightest, wouldn't be willing to just own all of Strategy and purchase it, right? Like, okay, now you control a bajillion Bitcoin, and you'd have to suck pretty bad not to be able to fumble that ball and not be able to do something with it. So companies like Strategy, companies like Tesla, I would absolutely own the whole company, no problem. At twice its current value, I think would probably still be reasonable. I think that's all I wanted to get off my chest today. So let's see if there's any trades to be made. I can't tell if I'm sharing. Let me stop and start again. There we go. All right, so I've got to take these calls off before. I only have 10 versus 1,200 shares, so I've already kind of taken some off. I guess I forgot to put 12 on. Can't remember if I did that on purpose or if that's just an accident. But I want to take most of these off before earnings, which is tomorrow. So I think the fact that these are half price is kind of convenient. Unfortunately, I'm already kind of using a ton of margin here. And usually tastytrade adjusts their margin ahead of earnings, 3 days before earnings. And I'm still pretty safe here. So they're not like saying, oh, you're in danger of a margin call or anything. I've still got a bunch of buying power available. So not too worried about it. But let's go ahead and close. Might as well just close them all today instead of waiting till tomorrow. This will cost me about $3,000. Yeah. And then Friday, regardless of what Strategy's price does, I will put most of these back on. The poor man's covered calls, I basically leave on all the time. Like, even if Strategy was to have some kind of crazy announcement and the stock ran up to 550, that would just be fine with me. That would just give me an excuse to exit all of these positions and dump a bunch of leverage. This account is way over leveraged compared to its size. And as Strategy has been shitting the bed for the last 10 months, 11 months, I've been adding more and more leverage. I exited a little bit of leverage here in July, but not nearly enough. And then I've just been steadily adding leverage as we've been going down into the right. My plan is that if we hit 275, maybe I'll peel off another 100 shares and add more leverage. And then if we get to, actually, was it 250? Yeah, maybe another 100 at 275 and then another 100 at 250. And if we fall below 250, which we've already tested several times this year, 240, 240, 240. Yeah. If we fall too far below 240, again, before the next rally, I will have already exhausted my willingness to add leverage. That'll be about all I can stomach. I don't really, well, I do have another 400 shares in the other account, but I didn't want to fall below 1,000 shares. So technically, I guess I could peel off 600 total. But anyway, I don't want to get that. I don't want to get ahead of myself and just FOMO into more leverage when I probably have more than I can stand right now. Anyway, the other thing is taking these off around earnings. On any stock that you're bullish on, you can do this. A lot of times it's binary events that the market reacts to, and earnings are one type of binary event. But since this one is worth less than half of what I sold it for, this one is ready to roll, but unfortunately, I can't roll to 45 days to expiration because they're not available. The exchange hasn't put in December 12th. So I'm kind of stuck. I don't think they're going to put that in until maybe the next few days. But at some point, this weekly expiration date will be added. So I would normally be anxious and ready to roll this at this point. But I think I'll probably end up waiting, because if I just try to roll out 1 week, and let's see, I could roll down. I almost pointed with my hand at the screen as if you could see it. But I would need to roll to approximately somewhere between the 375 or between the 350 and the 375 strikes. So if I roll expirations just 1 day to collect a little bit of premium, it's really not worth my time unless I roll the strikes closer to the expected move. With the way that these leaps are getting wrecked, and actually they're not even leaps anymore, I really don't want to roll this one below 350. And that would only result in like a 287 credit. So I'll probably just go ahead and wait until the, it's going to be funny, because by the time the December 12ths become available, I'll be ready to roll to the December 19th anyway. So I'll just wait till next week. That was a long way of saying this is ready to roll. It's 50% of what I sold it for. However, because of the expiration date that's not available, I'll just wait an extra week. It's not the end of the world. And if strategy does run up for whatever reason, maybe this will save me from rolling down to the 350 and limiting my upside even more than it already is. I hope I'm actually, yeah, I just checked my my mic. Looks like I'm actually audible. I was a little bit paranoid because I didn't have my AirPods connected, and I connected it after the live. And sometimes screwing around with the audio in the middle of a live stream screws up stuff. So Tesla's doing okay. Same deal here. I'm going to go ahead and switch the account I'm trading here to my IRA. So I only have $179 worth of buying power. So I'm not going to be able to afford to, I can't just use margin. So I'm not going to be able to take this position off unless I sell some shares. So do I want to do that? That would cost me $1,400, which is like 5 shares. Let me sell 4 and see if that's enough. With my 1304, no, it's not. All right, that should give me enough buying power to close these. There we go. So I'm in a similar situation. I'll leave the poor man's covered calls on, but I'm going to go ahead and leave my shares uncovered just in case this binary event, something amazing happens. No reason to think that it will or that it won't, but out of an abundance of caution and paranoia, I'm going to take the limited upside off of my shares. This one's kind of a poor man's covered call, I guess. So I'll leave that one on. And then this one, let's see, there's $60 of extrinsic value left in these. And theta is 60. Nah, that's not quite accurate because that would mean all the value, right? Because I have 4 of them. Yeah. So maybe tomorrow there would be $30 left in this option. So I probably, should I leave them on or take them off? Leave them on or take them off? I got $300. That is enough to pay for closing all of these. So yeah, I'll just do it. No fill? Okay, there we go. Yep. All right, same deal. Shares, I'm leaving uncovered over earnings. And these are not ready to roll anyway. The best thing that I can say about this account is that I shouldn't even say it out loud to jinx it, but I can at least pat myself on the back for selecting a strike that has not gone freaking out of the money, especially the 200 strike. This one's still an 82 delta, so this is still functioning well in a poor man's covered call. 250 is getting a little shaky. The 0.69 delta, generally 0.7 is as low as most poor man's covered call sellers or poor man's covered call runners are willing to go. So this one's getting close. And we've already tested 250 several times this year, so this is completely reasonable for this thing to go out of the money as compared with the poor strike selection on these 300s. So you can see that they've lost half their value. Paid 15 grand, they're only worth 7,500 now. Whereas the 250s have maintained their value much better. Actually maintained their value better in over a longer period. So I know there's, for me personally, there's always a pull to try to pick the highest strike because it's cheaper. But the lower strikes, the more deep in the money you choose, the less theta it's going to collapse, the delta is going to be higher, and you're going to have less gamma risk because you're so deep in the money. When you pick something that's closer to the underlying price and is only slightly in the money, then all the stock has to do is fall 10-20%, and that position gets kind of wrecked. So yeah, this is just a function of me being a little bit greedy and bullish, really, and being wrong about my my level of bullishness. All right, so that's all the trades in the main account. The 5K account. So I traded with my brother-in-law. We copied trade on a couple of cheap, we're basically running the wheel. We took off CLSK, and CLSK became a little bit too expensive for his account. So well, actually, that was kind of silly because, yeah, actually CLSK and Cypher are about the same price. So anyway, I moved them over to Cypher, and we sold the 15 for $1. And he didn't have that much buying power left. So I went ahead and we were barely able to get Wolf, but we had to be very conservative with the strike that we selected. I would have preferred to sell like the $12 strike and get paid a little bit more premium, but he only had 1,100 in buying power, so we ended up having to go with the 11 strike because that was all we could afford. To an extent, there's no perfect strike. So really just adhering to whatever your portfolio will allow is perfectly fine. I think people agonize over, oh, should I sell this delta or that delta? And sometimes you just let your portfolio dictate what you can afford to do. I think I'm in a similar situation here. No, this isn't even ready to roll anyway. So I'll wait until next week to roll that one. I got my weekly Wolf call. This looks like it'll still get called away. Just my last 100 shares. And depending if I have enough buying power, I'll just sell another cash secured put in Wolf on Monday. What's ASST doing? Okay, so ASST is coming back down to earth. So I'm glad I was watching and paying attention and sold, a couple covered calls at the $2 strike and just reduced my cost basis by another 18 cents per share. Yeah, that should do it. That should do it for the day. Yeah, I've got $9. I've got $9 in buying power. That's funny. Efficient capital usage. What's up, Angry Buddha? I think I'm coming to the end. Really didn't have a whole lot to do, so I mostly just ran my suck.